Today we have to discuss the cash management and preparing the financial plan. Before that, we have to understand what is cash and why the cash management is needed for the entrepreneurs. Actually, the cash is the most important factor to decide the company whether it is survive in the business world, or sometimes you will have to stop the business unless you manage the cash properly. So that I will explain some important matters to manage the cash. Actually, cash is a limited resource you have. How to manage this cash. So let's in the first lecture, let's see how to do this one, and then second lecture we can discuss how to prepare the financial plan. So first of all, we have to understand what is financial plan, the importance of the financial plans, and what is managing cash, and also cash management role for an entrepreneurs preparing perform of financial plans, and how to forecast sales, receipts, and the cash disbursements. You know that the entrepreneurs actually, they may not have a proper knowledge for managing the financial management. Sometimes they are they have competency in innovating the products or services by analyzing the customer unmet or unsatisfied need, and develop the products. And also they may not have sometimes, not always, sometimes the proper marketing experience, proper financial management experience, and also sometimes some entrepreneurs may not have a proper understanding how to get the work done from the others. So you have to understand very clearly human resource management, financial management, and marketing management, and those are some essential parts to become a successful entrepreneur with conducting the successful business. So the importance of the cash, I don't want to explain more about this one. You can understand, without cash you can do nothing. So everything is about cash, and also to generate or raising it, and also keeping that one, conserving it, and also collecting the cash when you sell some goods or the services to the people. You have to collect the cash in right time, and if the customers pay delay, you have another cost for this delay. Sometimes you if you have planned to buy the raw materials or pay for the raw material suppliers or some items, you have to have a certain cash payments. So you cannot do those payment unless you can collect the cash in time. So the very, very important, cash is everything is about the cash, raising it, conserve, and collecting it. So you have to generate the cash, and also you have to conserve the cash, and that means when you spend the cash, you will have to understand to explain to spend the cash for the most important thing, and also collecting the cash in time. And common case of business failures, cash crisis, even in not only the business, but you can understand the country also. Country itself may face unless there is a proper cash management. Okay, that's why you have to understand. Okay, then we have discussed the common use of business failures, cash crisis. I don't want to explain more about this. Not only the business, when you consider the countries also, common failure of the bad management of the cash, or the cash crisis, or there is no any discipline to manage the cash. so that you have to if you want to be the entrepreneur, or if you are an entrepreneur, you have to have a discipline of spending the money, discipline of expending the money. So the financial plan actually, when we can find some different definitions in even the Wikipedia or any other, when you refer some books you can get, but briefly we can explain. Planning is the task of determining how a business will afford to achieve its strategic goal and objectives. Financial plan actually is a task of determining how a business will afford to achieve its strategies of the goal. And when you at the beginning of the year, or else beginning of the financial year, you can prepare the forecasted financial plan. In such case, you have to to give the cash generating how to cash generate and how you are going to spend. So the generating, actually you can sell your products or services, and in that time also you can forecast within this month, or you can divide it to the short term goals and explain like this: for the first 3 months I want to sell this number of product, or else I want to achieve this much of cash for the first quarter, first 4 months. Likewise, you can have a plan, and when you can and also when you spend that, for that one, when you increase the product or service, definitely you will have to have a cost for that. For the cost also you have to spend the money. In such case, you have to have a balance of these things. And also, if you have a profit, you must have another plan how to use this profit. You will have to pay for that salary, and also if you have any loan installments to be paid. So all after paying all those things, you must have a balance in the company. Otherwise, if your expenses are higher than the income, definitely in a few months time or few years time, definitely your business will collapse. So that you have to have a good balance of managing this cash. So that in the Wikipedia definition, when you see, the financial plan describes each of the activities, resources, equipments and the materials that are needed to achieve those objectives, as well as the time frame involved. That is why I told you the financial plan prepare for a certain period of time, and profit and loss account is prepared for the period of some time. For an example, from 31st of from April 1st to 31st of March, or else the balance sheet is prepared to the exact date. So then, when you consider how to provide the entrepreneur with the complete picture of this cash, actually the amount funds, and when they are coming into the organization, you have to understand how to generate the money, and also where funds are going and how much cash is available. So when you disburse the cash, when you pay for the raw material, pay for the services or the services or the utilities you are going to, you have to understand how much you are going to spend, and also the projected financial position of the firm, and also in every month, or else when you prepare the estimated financial plan, and also you can always compare with the actuals and see whether the estimated one is violated, not the violate, actually exceed the actual one. In such case, you will be careful to reduce your expenses and keep on the estimated level. and projected financial position of the firm. Actually, you have to project the financial position, and the plan explain how to entrepreneur intend to meet the financial obligation and maintain the venture's liquidity. So then from that, definitely from the beginning of the business, when you start the business, you will have to have some payments, and but for the second and third years, gradually you have to come to the break even point, and then you have to generate profit. And it provides the business plan with consistency, and by confirming that objectives set the achievable of the financial point of view. And when you are going to set the objectives, those objectives must be achievable objects. Otherwise, you will not be able to achieve those objectives, and resulting you may your income is going down and your expenses is going high. And with that misbalance of this, finally you have to face financial difficulties in the business. So common mistakes among the business owners: failing to collect and analyze the basic financial data. Sometimes you are failing, sometimes you may have debtors, but you can't collect the money from them. Okay, so then you have to give a certain time period, and within that time period they have to pay for the outstanding to you. And also you also must pay if you have any outstanding to the outsiders. And also many entrepreneurs run their companies without any kind of financial plan. Sometimes they don't have any financial plan, just they run and they don't have any financial plan. If they had plan, they would have run the business with profit. And also the financial normally each and every company must have a discipline for this financial, because the financial is the critical factor to decide whether the business can survive in the business world, or you have to stop the business, and sometimes you will be bankrupted. So financial planning is the essential of running the successful business and not the difficulties. And those are things you have to understand. This also helps the entrepreneurs to set the financial targets for the organization and reward to the staff or meeting objectives. And you have to, that's why when the companies are getting larger, there is a certain finance manager, and he has to balance all these financials in the company. And unless there is a balance, definitely your company will fail. So the entrepreneur has to show the readers, investors, or the venture capitalists how all the ideas, concepts, and the strategies described elsewhere comes together in the profitable way. Financial plan is actually this will be the roadmap. So at the beginning of this course module, I told you that the business plan is the roadmap of your business and how to manage the business with profit. So it will explain the marketing plan, financial plan, operation plan, as well as explain the product and the services, the customers, and business model, which I explained 3 weeks before. The business model itself has the 7 canvases. So the business plan document is the roadmap of the business, and it will help to run the business in a profitable way. So it will explain the capital budgets, manufacturing budget, marketing budget, and operating budget also. And cash management includes forecasting the cash, collecting, disbursing the cash, and also you have to invest the cash. You will have to invest the cash if you have extra or excess one. you have to invest in a different business, or else you can invest and enhance the, or else increase the production. And likewise, for each cash, company needs to operate smoothly. Know your company's cash flow cycle. So you have to know the cash flow cycle of the company, cash finder and cash planner. 5 cash management roles of an enterprise cash finder. You have to find the ways of generating the cash, and you have to have a plan to expense this cash in a truthful way, as well as cash disburser, how to disperse the cash, how to spend the cash effectively, as well as cash control. Financial controllers are there. Financial controller has a very, very risky and important job, and he is the man who controls all the company. And but the entrepreneur, when you get the entrepreneur, he does not have the enough money at the beginning to get to hire a person for this one, and he has to manage that. And also cash conserve cash. You have to save the cash for the future use. And we have to understand cash is not equal to the profit. Different profits is a difference between the company's total revenue and total expenses. Total revenue plus minus total expenses. Then the cash is money that is free and readily available to use. Cash is actually money, monetary one that freely and readily available to use. And cash flow measures the company liquidity and its ability to pay its bill. Actually, for the operation, for the day-to-day operation, a company must have a certain cash in hand. So they have to pay. Sometimes they can get the time period to pay if they purchase the raw materials or the item from the companies. They will give 55 days or 2 months or 3 months time to pay. But to do the day-to-day operations, and there are some concurrent operations. For an example, concurrent operations means salary. You can't say that your employers to pay the salary 3 months after 3 months. So monthly you have to pay the salary for the workers, as well as electricity bill, water and telephone and internet charges. Those are concurrent operations actually. Concurrently, and every monthly you will have to pay, so that you have to have a certain money with cash in hand for this day-to-day payments. So here you can see the cash flow, the cash increase and cash decrease, actually incoming and outgoing. You can see the account receivables, cash sales and inventory also can increase the cash, and account payable and production and cash purchases. And here you can see also the inventory increases, as well as cash sales, the finished or the finished items will use for this cash sales and other things. What is a budget actually? Cash map that shows the amount and the timing of the firm's cash receipts and the cash disbursements over the time. So predicts the amount of cash company will need to operate smoothly. Those things actually very you can easily understand. That's why I'm explaining. I am reading, or not going to explain, and help to visualize the company's cash receipts and the cash disbursement at the resulting cash balance. Normally, when you are going to prepare the financial plan, you have to prepare the balance sheet and income statement and the cash flow statement. These three documents are very, very important. Then you can estimate how much you need to operate. uh, you, you can actually prepare the first salary budget for the whole financial year. If you know the number of workers working in your company, and if you haven't a plan to recruit new one, you can calculate the estimated budget for the salary, and also income also. Then you can forecast the income, and you can forecast the sales, and according to that you can forecast the income that a certain year may have. And also you can forecast the expenditure, the budgets and electricity, the estimated one. Sometimes the electricity and the telephone and water, there may have some slight changes, but when you forecast things, sometimes if a month increase the electricity bill, sometimes there are some months it will decrease the bill, and balance in that one. When you forecast for the whole year, you can reach to the estimated values. And so preparing pro forma financial plan. What is this pro forma? Pro forma means not the actual one, the estimated one. Estimated one determine the minimum cash balance you will have to keep, and also not too much, not too little. Actually, when you are decide the minimum cash balance, you must keep always not too much and not too little, but cash balance that's just right for you. And there may have slight changes, but you can think that the amount that you can keep. Okay. Next is determine the minimum cash balance. Actually, we have discussed forecast the sale. By forecasting sales, that means the heart of the cash budget, the forecasting one. Sales are ultimately transformed into the cash receipts and the cash disbursements, and cash forecast is only as accurate as the sales forecast for which it is derived. Actually, when you forecast the sale, you can't predict the situation like the COVID pandemic situation. You know that sometimes those are some extraordinary incidents happen in the world. So you have to forecast in the analyze in the general condition. If there are some extraordinary incident happen, this will change. And also lumpy, that all the seasonal sales patterns are common. You know that if your sales might increase during the new year or in the Christmas season, or else sometimes if you do a software business, you can't have such like of the normally for the throughout the year you may have some continuous sales, not like the peaks actually. But if you find, then you have to have a plan to get more customers. That is not the periodic one. You can get the foreign customers, foreign clients for your business. So likewise, you have to have a plan how to increase your business according to the type of the business. If it is a product, you have to increase. You have to have a plan to increase sales. If you are a service provider, you have to plan how to get more clients. And 50 to 80% of wine and spirit shops annual sales occur between the December 15th and 31st. Actually, this is one of an example. And 40% of toy sales take place last 6 weeks of the year. These are actually some analytical information to understand this forecast and prepare the 3 sales forecast, that is pessimistic, optimistic and most likely. Pessimistic, optimistic and most likely. 3. Pessimistic in the worst case, optimistic in the best case. Actually, most likely means not the not the high end and not the low end. Actually, generally, you have to prepare it. And also, next one is forecast cash receipts. You have to forecast the cash receipts also, and records all cash receipts when the cash is actually received, each cash methodology accounting, and determine the collection patterns of credit sales, then add the cash sales. So you have to have a pattern and you have to have a plan to remind the your credit sales and to 1 week before the date that you have given to them, and then just to remind, and you can use different methods. Actually, you can give a call or you can send an SMS likewise, and monitor closely, show the non-play. Actually, you have to monitor them and try to get, if you get delays to collect the money, this will also be a cost for you. You can't pay you can't pay in time. Sometimes if you have planned to pay the salary from that one, it will delay likewise. Here you can number of months and probability of collections. Here you can see 20% can be collecting. When you consider this, you can see 40% can be collected within, if it is, this is days actually, 24 days. When you can see the first 100%, you can rarely collect the 100% probability of collection from 100% of collection can collect from one 93% actually collect when you consider by getting delays. You can collect 85, 73 likewise. You can collect. Actually, if you definitely you may have a lesser number of debtors that you have to remove from your books, actually like bad debts. Then third one is forecast cash receipts. Fourth one is forecast cash disbursement. And cash disbursement actually record disbursements when you expect to make them. So you also will have to pay for your raw material suppliers and other the services that you got. So you have to forecast that. Start with these disbursement that are fixed amount due on certain days, and also review the business checkbook and ensure accurate estimates. So that means from all these things, you have to assign one person for this one. Actually, even when the business is getting larger, one person cannot do all those things. You will have to employ someone to do this one, and collect the cash in time and pay the cash in time, and add caution to the estimate to the account for Muti's law. Don't know where to begin, and try making a daily list of items that generate cash and those that consume it. That means the short term plans. And normally at the beginning you will have to have a weekly plan and monthly plan and quarterly plan and the annual plan. So weekly plan, you have to plan weekly. So how many items you want to sell, how many services you want to provide, and if it is a development company, software development company, you have to do the project manager's job as well as marketing, everything sometimes at the beginning. In such case, you are very busy. Then, in spite of all those things, you will have to enter for the development and the design of the softwares also. So that is in the software business. But when you consider the others, you will have to involve for the each and every operation in the business at the beginning. That's why if you want to be the entrepreneur, you can have the overall knowledge of the business. That you have to involve the production as well as forecasting, managing finance, marketing, and also you will have to have a good interpersonal relationship with the customers, your customer segment. Everything you will have to do, and you can get the all-round knowledge about the business. Next one is estimate end of the month cash balance. Then at the end of the month, you have to have estimation the cash balance. Taking the beginning cash and add the receipts and subtract the disbursement and result the cash surplus or the cash shortage. Sometimes you have your company has cash in hand, but sometimes the expenses exceed the income. So big three of the cash management: account receivable and also account payable, the payable as well as inventory. These three are very, very important. Account payable, account receivable. So how much you have to receive from your sales, and how much you have to pay, and the inventory, that the stock you have. The stock is the cash. You can convert to the cash in near future, actually, not the cash. Actually, cash like this you can easily convert to the cash. Account receivable is about 99% of the industrial and the wholesale sales are on credit. Industrial and wholesale credit are sales, and 40% of the retail sales are on account. So, survey of small companies across the variety of industries found that 77 extend credit and others customers. So likewise, you can remember the sale is not a sale until you collect the money. To complete the sale, you have to deliver the items, you deliver the goods and receive the money. That is the two-way transaction actually. You have to deliver the product or service, and return you have to get the money. So that is the sale. And account receivable goals is collect your company's cash as fast as you can. As I told you, if it delays, that means if it delays, you can't pay for your debtors in time. And account receivable is establish the firm credit generating policy. You have to have a policy and screen credit customers carefully, as well as develop the system to collect the accounts. And when you do the business for a certain time, you will realize and you can understand who are the genuine buyers, and when you sell the items on credit, whether you can collect or you can whether you can or cannot collect the money from them, so that you can you have to careful when you give the items, when you sell the items on credit basis, those who will pay. Otherwise, you may have some losses. And send the invoices promptly, and you have to send the invoices properly and the reminders in time. And when an account becomes overdue, take actions immediately. That's why when you, if you have a credit card, the banks will send an SMS 1 week before that you have to pay the minimum amount before this date, and after that they will also send the SMS to get saying that to pay for the credit card. And add finance charges to overdue accounts. Then you can do if it is a big company, they can do it. Actually, even the banks also add 900 rupees or 1000 rupees for the delay payments. But if that is depends on the size of the company. And alternating the account receivable, accelerating the account receivable, ensure that invoice are accurate and timely, include the description of goods or services purchased, and also ensure that the invoices match purchase orders or the contracts, and highlight the balance due and due dates, and include contract information in case customers have questions. Actually, this is this sometimes, according to the size of the company, this can implement, or sometimes this cannot implement. But regardless of the size of the business, if you are an entrepreneur, you have to be careful to collect the money and prepare the operational budget, as well as at the beginning of the business. When this is a startup company, you have to prepare the forecasted financial plan for the quarterly forecasted financial plan. Then after 2-3 years you are doing the business, you can annually prepare the forecasted plan, as well as at the end of the year you can prepare the financial plan. So these are the things you have to understand. Actually, account payable, you know that you also have some payments to the others, you have to do in time. Also verify all invoices before paying them, and also take advantages of cash discounts. And sometimes when you pay with the purchasers, you can get some discounts. But if you want to get some time, for an example 3 months time, 1 month credit period, you will not be given the discounts. But if you have the money, you can get the advantages of paying at once. That's why I call the take advantages of cash discounts. Account payable, also you can negotiate the best possible terms with your suppliers, and be honest with the creditors, and avoid the check is in the mail syndrome. You can't actually tell, you have to honestly tell. If you get some time to pay, you can tell that I will pay exactly on this date because these days I have problem. Likewise, pay the truth actually. Then you can keep the confidence with your suppliers. Schedule controllable cash disbursement to come due at different times, and also use credit card wisely. You know that credit card provides the facility, the credit limits, and sometimes you are going to use the credit card over time, without thinking your income. So in such case, you know that the interest of the credit card is very high, and you have to use the credit card wisely. Otherwise, you will face some difficulties. And inventory also, when you have the inventory, you have to analyze the items of the inventory. If it is a software product or any other product, you don't mind. But if it is a consumable items, what would happen? Sometimes with the time period, it will have some damages. So that you have to monitor closely about the inventory and keep that in a good condition. Otherwise, you will have to disperse the inventory having the low profit. Avoid inventory overbuying. It's tie up valuable cash at a zero rate of return. Sometimes that's if you buy more items than you are going to sell, sometimes you are going to have a problem of cash, and arrange for the inventory delivers at the least possible date, as well as negotiate quantity discounts with suppliers when possible. Then when we consider the cash chunk, actually consider bittering, actually changing goods and services for other goods and services to conserve the cash. And trim overhead cost. You can cut down the overhead cost and also ask for the discounts and freebies, and periodically evaluate expenses, and lease rather than buy. Sometimes the lease is profitable than buying one, especially the computers and other items. You know that every 3 to 5 years time you will have to change this one. In such case, those items, if you lease, you can actually save a certain amount of money, and after that you can ask the lease company to take those items and give the new one. Avoid the non-essential cash outlays. You have to control those things and negotiate fixed loan payments and coincide with your company's cash flow. You have to balance adjust with the cash flow. How to trim this overhead cost? So sometime you can, rather than buying the brand new items, you can buy used equipment for your, and hire part-time employees and freelancers. Rather than recruiting the full-time employees, you can hire the part-time or freelancers, and outsource non-essential activities. You can outsource some activities, and control employee advances and loans. You can control. That means if you have profit, definitely you have to motivate your employees by giving the bonuses and other things. But if you don't have profit, what would happen to give the bonuses and loans? Recently I heard one news from the petroleum. Even though they have the huge loss, annually they are going to give 250 million, 250 million bonus for the employees. And also every month they are going to pay 200 million overtimes. So what would happen to the company? And establish an internal security and control systems. Develop the system to battle check fronts, and also change shipping terms. Also, if you have some overseas businesses, you have to regularly discuss to reduce those charges. And what are the benefits of managing this cash? Increase the amount and speed of cash flowing into the company, and reduce the amount and speed of cash out, and make the most efficient use of available cash. You can have a plan for efficiently using the cash, and also take advantages advantage of money saving opportunities such as cash discounts and finance essential business needs. So this actually in the finally we are discussing the benefit of cash management, develop the sound borrowing and repayment program, and impress the leaders and investors, and provide funds for expansion and plan for investing surplus cash in a profitable business. So finally actually cash is a king, and cash and profit are not the same, you can understand that. And entrepreneurial success means operating the company and lean and mean, and trim the wasteful expenditure and invest surplus funds and plan and manage cash.